We're going to talk about cement right now, but you just heard a fund manager saying that maybe things are finally improving for cyclicals like autos and cement. Cement stocks are trading well off their lows. Remember, they've underperformed for more than 2 years, but in the last month or two, they have, at least some of those stocks have been relative outperformers, and they're trading well off their recent lows of 2008. Anil Singhvi, now with RNRL, is with us right now, but to talk about the sector and what happens next. Anil, morning. Good to see you after a long time. What's your sense after such underperformance for the last more than 2 years? Do you think, from a cyclical perspective, the worst is over for the sector?
Well, then there are two aspects to it. I wouldn't like to comment first on how stocks have fared, but I would look at how companies have been faring. I think last 2 years companies have by and large fared well. There are two major impediments before the industry. One was the capacity, the overcapacity, and second is whether the demand will really grow in line with the growth of the last 4 or 5 years. But I'm glad that the demand seems to be really growing well. And all the oversupply concerns were overplayed by the markets, I think. So stock market was reacting to these two situations. A, economy is slowing down, and B, we may get into overcapacity. And let me dwell here on overcapacity. People talked about 100 million tons of new cement capacity to be added in 2 or 2.5 years' time. But it wasn't, I was never of that view that 100 million tons would have been created. Making announcement in India is very fashionable. People keep on making announcement for various things, cement included in that. But one needs to really look at the ground reality. And I'm happy that this is not really as devilish it was looking at about 2 years back. Second issue of demand, and which perhaps has surprised all analysts and proved them wrong. Despite all talk of economy slowing down, but we haven't seen that kind of slowdown in cement. And last 4 months numbers have been very good. Each month successively we are doing 16 million tons of cement dispatch. I think that shows that all is not that bad as far as construction industry is concerned. We often get guided by real estate prices and how developers have done. We look at DLF share and get very worried about the cement shares. I think those are very uncalled for reactions.
Anil, hi, morning. So let me narrow the target down even more. 50 million tons to be commissioned over the next 12 months. You don't think that's going to happen?
No, I don't think so. I don't think so. Ever in India you can have 50 million tons coming in 1 year. That's not a joke. So all these capacities, and people talk about a 3 million ton plant and stretch it to a 5 million ton plant and take it that as soon as the plant is ready, next morning, it's not buying a car, the next morning you can speed it out. It takes almost about 6 months to 12 months before a plant is stabilized. So all the concern on capacity is completely unfounded. I mean, we have seen in 2008 and 9 people talking about 30-40 million tons, and what we have seen is less than 20 million tons coming up as capacity, and productivity is still lower. All cement plants, I am told, are working at the full capacity. And that's very, very encouraging in these kind of times.
The thing that's happened these past few months, though, Anil, is that we are hearing lots and lots of reports of how much pricing is spiking across various regions. I mean, do you put that down to a function of the pre-monsoon spike you usually see in cement prices, or do you think something's turning around on the pricing front?
Well, let me put it in perspective. I think in Bombay we talk about monsoon and take from June to September. But in India, if you take it, the monsoon is just about 2 months, which is in July and August, and perhaps in about October and November in South. So monsoon is not that much of an impact that this is a pre-monsoon demand which is coming up, and in come monsoon and everything will break loose. No, I don't think so. I think I think we have to give this credit to the cement. That despite all this concern and call for that real estate is not doing well, I think we are seeing construction. And my own take is that when visiting smaller cities, I would take example of Ahmedabad or Jaipur or any other cities in this country, I think construction industry is doing well. Maybe it's large developers who are finding all of a sudden there's a problem that there's excess supply of that. But there is a demand. There is a demand for housing. There's a demand for infrastructure. There's a demand for all of the sort of activities. So maybe some sectors in construction industry of retail segments or of very large malls coming up or very large complexes, residential complexes, maybe finding it a little more difficult to sell the product. But I don't think there is any problem as far as demand for cement from the classical housing sector is concerned, which talks about repairing, renovation, extension and new house build. I think all 4 activities are doing well.
What's your assessment then at how much offtake, cement offtake will grow in the fiscal year 2010, Anil, and whether you will see net some kind of average price realization dip or increase through fiscal year 2010?
Well, then I think this year we'll finish it at around 8% or so growth at around 180 million tons. And next year, even in a doomsday scenario, I'm putting it that everything is really going bad in 2009 and 10, which most people are talking about. I think cement will still grow by 6 to 7%. So my best case scenario or realistic scenario, I wouldn't say even best case scenario, is 6 to 7% growth on 180 million tons, which will take us almost about close to 195 or so.
And in terms of average realizations and prices through the year?
I think we have seen cement prices being one of the most stable prices. In fact, that had demolished this whole theory that cement is a commodity, which often I have argued very valiantly, but always been a sufferer on account of analyst wisdom and their word saying that cement is a commodity. Cement is not a commodity, and I want to repeat it, cement is not a commodity, and this time it has proved like never before. All commodity complexes have collapsed, and cement prices have remained stable and perhaps firmer in the last 3 months. So my guess is that cement prices will remain more or less stable. We may see a small spike just before this peak season, which we are already seeing from March, April, May, maybe 2 to 3% increases being there. But the positive for cement is that the energy cost has come down, coal cost has come down, transportation cost will come down as we see the diesel prices coming off. So we may see a little bit of a positive uptake on the EBITDA margin for cement industry for the quarter of March, and going forward even June, which should be much better than June 09 or June 08.
Let me ask you this as someone who's been a CFO for many years, Anil. We were talking about a global brokerage report this morning which said that for most infrastructure projects, they're running behind schedule, brownfield and greenfield, whether it's because of lack of finances or it's because of regulatory hurdles. Would you say that is a fair assessment of the situation on ground right now, that most infrastructure projects are probably going to get dragged a whole lot more than the kind of stipulated period people were working with?
I think the pendulum has swung completely from over-optimism to over-pessimism. And I think we all seem to be a sufferer of that. But if you move yourself away from this pendulum swing, I think things are not as bad as it has been meted out. If you have a good project, money is still available. But if you are really running for a completely suspect project, perhaps you have a problem. There has been some delay because the banking sector perhaps went for a vacation from October till December. But I think the banking industry is back on the roll. They want to give money. Only thing is that they have become very choosy in terms of whom they should be giving money, because earlier the risk was not priced, and now we are pricing the risk. So I think from very excessive situation of money being available, it has become now selective, and that's where many people are finding it that things are slowing down and money is not available. I don't think on the ground reality the situation is so bad as it has been meted out. If you have a good project, all banks are flush with funds, and I see saving rate going up in this year because most people will have a little bit of holding their hand. So in that scenario, banks will have a huge fixed deposits coming in. So they would be awash with liquidity, despite governments planning for a very large borrowing between now until July or so. Still we will find banking industry having a lot of surpluses with them to fund the projects which are good, which are viable and robust.
Anil, appreciate you joining in this morning with your thoughts. Thanks for stopping by. That's one take on the cement industry. Speaking